mode.
Good evening, everyone. Welcome to Admiral Markets new webinar presented by me and my colleague Chris Swarzik. Chris will be here with us in some 30 minutes. He will show us some new stuff about MVP trading, NFP, and I will show you, because I have received so many inquiries from traders who wanted to see how to trade GBP, how to trade NFP, and I will be doing it again. I will present you how to actually trade the news. So basically what we are going to see today is strategies for news trading. I will repeat it again, and I will show you again those strategies which you can use to effectively trade the news. So we will concentrate strictly on that news trading today. Prior, of course, to start a webinar, risk disclosure statement. By accepting the risk and this risk disclaimer, you are accepting all the risks associated with Forex market, and you continue and you will proceed further with me. Okay, same, always the same. Now, another thing to look for. I encourage you again to sign up for special book gift. It's called Trading the Battle Plan. You should invite 3 friends on webinars, and you will get the book at the end of the week. So at the prior to the start of webinar, when you go and register, this is the link for registering. You should invite 3 friends, and you will get a book by the end of that week. I will show you again, because this is where you should register. Always the same. You go on admiralmarkets.com/education/webinars, and then you go, when you go to sign up, you click on sign up, and you can see you enter your first name, last name, your email address, and below that it says invite 3 of your friends by writing their emails here and get an ebook Trading the Battle Plan. So here is the field where you can enter the names of your friends, and you will get the book. The book is excellent because I also did some part on it, and you will see it's really good to have it. You can do that prior if you already registered, but if you didn't, you can always register here. It's next weekly recap, 13th of January, new Forex recap. To be honest, we had really a great success with those recap webinars, with those recaps, and especially trading. If you followed the analysis today, that was one of really, I can say, rare trades where we didn't have a single pip of a drawdown on euro dollar. You could probably see that if you follow the analysis. If you can you hear me? I just received the message there is no sound. I think there is sound. Do you hear me? Just type yes if you hear me. Yeah, okay. So Bob, try to modify the volume on your speakerphones. On your speakerphone. Yeah, I think that is the problem for some people. You need to know how to set up. Sometimes it happens, but you should solve it. So today, just before I start with Forex news trading, I encourage you really to read those. I will enter Forex Factory or Admiral Markets website. It doesn't matter. Let's see. It's here. I will show you. I will go to the link. It doesn't matter. It's basically the same. But you see a perfect trade. I will show you the perfect trade for euro dollar here. It was 36.32 exactly. At this point, we have shorted the euro. So you see, this was my first target, and the second target was 35.48. So it was the low for euro dollar. So you see how Camarilla got perfectly pipped out even the entry and the stop. It doesn't happen all the time, but surely I'm really very happy and when it happens. So that was some digression from our main theme. Okay, we can start again. Bob, try to check audio not connected. Yeah, try to log in again. So probably that will solve your problem. I think that it can solve it. Try to relog, okay? Restart the computer, okay? And now, fundamental analysis and fundamental views. What are key releases to look for? Then currency focus and news focus, and how to trade it. So we will especially we will mark GBP dollar and Euro dollar for our trading news releases. So we just don't want to trade only one pair, but if you trade news, you should know that you should stick to those releases which are tradable. And from my experience, not each of Euro dollar release is tradable. To be honest, there are very few releases for Euro dollar that are tradable. Even German's economic sentiment is not tradable because price, it doesn't have much spike. On contrary, sterling pound dollar cable can be traded very effectively. And again, I will show you how you can trade GBP dollar news effectively. So we will concentrate on GBP dollar and on Euro dollar. And have in mind that NFP trading, you can trade 3 pairs. The first is dollar yen, second is Euro dollar, and the third is cable. So we should take a look which news can be traded and which news should be avoided. Fundamental analysis. What is fundamental analysis? It is the analysis of the overall state of the economy, interest rates, production, earnings, and management. That is fundamental analysis. Also, it is interpretation of statistical reports and economic indicators. So when we trade news, we are not so interested in global view of the economy. So we are not interested what we'll do in midterm, what we'll do even intraday. Remember that news trading involves spike trading. That is the first 5 minutes of the news after the news has been released, okay? So we don't want to wait for those releases and then enter trades randomly based on our bias or actual numbers. The first 5 minutes after the news release is tradable, okay? So we are gonna talk about news spike. Fundamental analysis. This is the global view for fundamental analysis. It maintains that markets may misprice a price in short run, but that the correct price will eventually be reached. What does it mean? You have probably noticed many times before that on actual news release we had a steady price action. Let's say that euro dollar, doesn't matter. It was, let's say, bullish from the start of Asia till London. And then there comes German's economic sentiment, let's see, and the price violently drops downwards. So that is the first spike and the first thing which fundamental analysis does. Yeah, it mispriced the price in the short run. So this is when the price is mispriced. But correct price will eventually be reached. So you can notice many times that the price goes in the direction of news release, but sometime after 1 or 2 hours, it is back on the track with predetermined trend. But those profits can be made by purchasing the mispriced pair and then waiting for the market to recognize its mistake and reprice the exchange rate of a pair. So this is what usually happens, and that is if you followed Spider's Den. Also, I wrote down there that after I think that it was a Friday price action, and euro was down, and then I said, wait, this can be a level to buy it again. And what happened? Euro jumps at 30 pips to the upside. So basically that was happening, and that almost always happens when trading and after news release. So if you saw the price action today on euro dollar, we saw that the price was really spiking up prior to ECB press conference. The price was up. It was going up, and just prior to the start the price went to 32. That was predetermined point, and then the price went down to test 35.48. After some correction, the price generally stayed below 36. So from time to time you would probably be confused, but you need to adapt to the news trading. News trading does not have anything in common with standard price action trading. Okay, because news trading is generally spike trading. Okay, and there are other mechanisms to trade price action. Also, fundamental analysis tends to have a broader impact on the market than technical analysis. Again, I state, this is global view for fundamental analysis. We won't do any deep analysis, and when we trade the news, we are not interested in deep analysis. We are interested in spike. This is the spike after the news. This is the spike after the news. So we are interested in that candle, first 5-minute candle after the news. We say that market is in equilibrium when fundamental analysis goes along with technical analysis. That means that fundamentals perfectly follow the text. That is the time when we usually make good profits. So if we were, let's say, long on euro dollar, and there come the news which go in favor of euro dollar, what happens is the price can violently break the resistance, collect some stops, and proceed further in north direction. So that happens also from time to time, and that is when we say that the market is in equilibrium. It doesn't happen all the time. So sometimes you will see those corrections at the news. So the price can behave differently prior to news and after the news, but generally it will correct itself after some time. Let's say usually after 1 or 2 hours the price corrects itself. Okay. Fundamental views. Economic data tends to be one of the most important catalysts for short-term movements in any market. So many times you've noticed probably that on speeches on Fed, or let's say Chief Fed Chairman Bernanke, Draghi speaking, Kuroda, Bank of Japan, when those conferences kick in, usually what we see is the price jumps. Price misbehaves, going technically very, very incorrectly. But what does it mean? That means that that is one of the most important catalysts for short-term movements. Many traders are closing their positions then. A lot of money is being pushed in a certain currency, either selling the dollars or buying the dollars. So usually what we see is big volatility on short time frames. And if you see 1 hour candle, we can see sometimes that the range prior to news is very, very small, but after the news there goes the candle which usually makes a cross, marking the upper and the lower range for that trading day. Sometimes it happens, and that candlesticks, that candlestick which appears after the news usually can be a dragonfly doji or stop candle or a spinning top, which indicates generally indecision. But that indecision is not triggered by any real indecision. That is indecision between short-term traders, those guys, those funds that push the money into the market and pull it out after every word and every sentence of let's say, central bank chairman. So when those news kick in, we can choose to trade or not to trade. That is our choice. So spike trading and that spike momentum, which can be traded, technically does not have anything in common with that day bias. So if the bias, let's say for GBP, is long and bad news came for GBP dollar, you can see a big spike to the downside. You can trade the spike, okay? This spike can be traded, but you need to know where to exit the position, because almost 90% of the time during that day the price will correct itself again, even breaking that day's high, because generally that news is bad, but UK is in good condition. State of United Kingdom is in excellent condition. So basically you trade that first 5-minute spike after the news. I will show you how to do that. And this is what I was talking about. Depending on the current state of the economy, the relative importance of these releases may change. So if we know that, now pay attention to this because you will incorporate that in your trading. If you know that state of UK generally, United Kingdom, is in perfect health, well, don't say perfect, it's in good health, and you can see that on weekly time frame, even on monthly, even on daily time frame, doesn't matter, GBP is going steadily to the upside. So relative importance of those intraday releases may change. So if bad numbers kick in for that day for GBP dollar may correct itself to the downside. You can exploit this spike, but you can also read, let's say, my or Chris or another intraday analysis and use the spike for another push to the upside. So effectively you can trade the first spike, then wait for the price to drop, and if it drops to the predetermined level for buying, we can experience a nice, great risk to reward long trade. And that is what I had in mind today with GBP dollar. This was the analysis. So imagine that today we had the news. So we see that GBP is in uptrend on intraday time frame now, and generally it's in uptrend. So if the news kick in and if the bad numbers came in, we could have traded the first spike, but we could also trade it after the retracement. So I wanted to see retracement to the downside, and I would buy it somewhere around there. But for the price to reach those predetermined levels, we should see some heavily driven dollar news. But that was very strange because euro dollar went down, but cable was very, very firm to the upside. So they were uncorrelated, and basically what happened, euro dollar tanked and GBP shoot it up. Well, if it's in normal conditions, both of those pairs would be driven down by dollar strength, and then we could trade the first spike of GBP, even though it wasn't specifically GBP news. But if that was a valid trade, we would see a spike to the downside, and then we could place a longs around there. And I was 70–80% sure that if the pound made it here, we would have at least 20–30 pips out of this trade, but probably even more. Okay. Unfortunately, it didn't kick in, but general bias is for cable that it is very, very bullish. So you can also use those numbers to trade. So it doesn't matter even if you know that GBP is let's say that GBP turns to bearish. Even if good numbers kick in, that would mean that the price will correct to the upside, but then again it would find a level for shorts because general direction is to the downside. So there are many good opportunities when trading GBP dollar, and you should guys try to demo trade it to exploit those opportunities. I will show you also, don't worry, how you can trade the news effectively on 5-minute chart. Okay. Some news, and this is also important. The key to trading news is knowing which releases matter and which don't. I made a summary of news which can be traded. Okay. Some news creates shorter, but some create mid-term impact on the markets. Massive amount of traders are entering or exiting based on the news release, and these traders want to do so at a price they feel is best. This causes a relatively large move immediately following a news release. So that move is caused by this, and that move we call spike. Spike after the news. We trade the first spike. We are not interested in weekly or mid-term impact. So for trading the news, we are not interested in weekly or mid-term impact. We are only interested to trade that very first spike after the news. So this doesn't interest us. So if, I don't know, if other analysts say it's much easier, to be honest, to make those monthly or weekly reports once per week and say, okay, we can see 200 pips to the upside, then I can number the levels, just rewrite it from my chart, copy from my chart the levels, and I can see, and I can say, okay, the pound will go there, then it will probably, if it doesn't break it, it will go down, and that is weekly report. I don't do it that way. Intraday analysis is a lot harder to do than weekly analysis because you need to take account possible intraday movements which can be manipulated by other sources. So that is the same thing in news trading. We are not interested in weekly or mid-term impact. I'm not interested if euro dollar is bearish now. I am not interested whether it's bearish for this week or for that day. I'm just interested in first 5 minutes. Okay, first 5 minutes is important for news trading. After that, we wait either for stop loss or a target profit. Then it can be whatever it can be. We are not interested in that if we trade the news. Okay. There are dozens of key economic releases each month. Okay. I will show you, I will answer the questions. No problem. There are some problems. Just to make a little small break. Am I not allowed into this webinar? I don't know, Bob, how you're not allowed. Everyone is allowed to attend webinar. Obviously, I don't know what the problem is, but try to check your computer. you shouldn't be blocked. You should be allowed to enter the webinar. Okay? I just don't know why you can attend it. It's very strange. Maybe you have some kind of computer virus. I'm not sure, but you should be allowed to join the webinar. Okay? Let's continue with webinar. There are dozens of key economic news releases each month. We have, yeah, it could be a firewall issue, maybe, but I'm not now. I'm not an expert in, yeah, I know, guys. Everyone can hear me, but unfortunately, Bob is having. I'm not an internet expert, you know. I know basic stuff, but you should ask for support. I don't know. Try to relog or something like that. So what I can say, there are dozens of key economic news releases each month. There are interest rate decisions, NFP, FOMC decision, inflation, consumer price or producer price, which we call CPR, PPI. Yeah, CPI numbers. Yes, email supported Admiral Markets, Bob. Okay, CPI. We had that CPI report, and you saw that there was a triangle prior to CPI report, and if you followed our webinars, you know that the triangle is a sign of congestion. After the CPI, price went up, but that jump was good because we could have sold the price later, and we could have sold it higher. Okay, so this is CPI is important for Euro. Unemployment, industrial production, business sentiment surveys, German IFO business climate, ZEW sentiment, consumer confidence surveys, trade balance, manufacturing sector surveys, stress tests. Stay away from stress tests. Don't ever trade any stress test, and try to be out of any trades if there is a stress test undergoing. I have traded a stress test some, I don't know, 3-4 years ago, and believe me, stay away from it. I have seen that on stress tests, usually the price can jump up 50 pips, then it can jump down 30 pips in a second. But fortunately enough for us, those stress tests are not conducted very often. I can say that now they are very rare, and basically if you see that stress test coming, stay away from it. Okay. Now, most important news release data for Euro I have collected, and important to know is that I use Forex Factory calendar for news data. There are other, mostly maybe some more detailed calendars on other websites, but I have been accustomed to Forex Factory calendar, and somehow I am very good in reading the calendar. It doesn't require a lot of knowledge, but basically it requires you to log in, to enter your time zone, and then you can see most important news for that day. I have collected some of the news which I deem that are most important for Euro, but another thing is we don't have very effective method for trading news releases on Euro dollar. The most effective and the best method I know for trading news is GBP dollar, and you will see you don't need any indicator. It's very simple. It's basically a form of naked trading, and it does involve a common sense in determining a trade point. I will show you. So, minimum bid rate, ECB press conference, German ZEW economic sentiment, German flash manufacturing, ECB, president speaking, and German IFO business climate. Of course, all of those are very important news which can, again, spike the price in contra direction for that day. So let's say the German ZEW economic sentiment kicks in, the price was bullish, and then bad numbers come in and price drops down. You should wait for that and enter along after the price corrects itself. That is what I would suggest when you trade the news. So first, wait for numbers to kick in. Then if there is good number, then you can do much, because the price, it won't be a big spike. It will go to the next resistance, then maybe it will stall, and then it will probably correct itself. But most of the time, if trend on euro dollar is bullish and German ZEW economic numbers are bad, the price will correct itself, then you can try to enter along after the correction. So we cannot trade the news the same way we trade GBP dollar news, because German ZEW economic sentiment, flash manufacturing, those kinds of releases have just an immediate impact on the market, which is not so big to trade a spike. Spike on GBP dollar is a lot bigger and more tradable. Of course, minimum bid rate, you can trade it if you are brave enough. Usually, if there is a surprise, as this price can drop 200 or 300 pips in 2 or 3 hours. Okay. Most important news release data for dollar include a lot more news. So you can see FOMC, ISM, you just read to this screen and you can see all and many news releases for dollar. The most important being non-farm employment change, which is due every first Friday of the month. So every first Friday of the month, usually the same time, but sometimes time may change, you should check the calendar, there is non-farm employment change, which is tradable news and which we can trade. Okay. Also, I would like to stress out that we don't trade each of those news. We will usually trade only NFP, non-farm employment change, and be very aware of the price action during other news, CPR, retail sales, and so on. The general guideline for other news except non-farm release is the same. If dollar is bullish for that day and bad numbers kick in, okay, wait for the price to retrace, that goes long, and that is usually the case also with euro dollar and other dollar crosses. But we will concentrate, of course, on trading non-farm employment change. NFP can be traded, but only experienced traders should do it. So the currency focus and news focus is this: US dollar, British pound, and euro, that we can put it in the first group. So the first group can be traded in London, New York session. The second is CAD. CAD is traded during US session, and there are no much movements and big movements for CAD during London session. And Australian dollar, Japanese yen, New Zealand dollar, Kiwi, and Swiss franc can be traded. Let's say the Swiss franc, I have made it unsuitable for trading due to pegging. Fixed exchange rate is fixed versus euro. So this group we can consider Australian dollar, Japanese yen, New Zealand dollar, and those currency pairs can be traded during Australia and Asia session, especially on late Asia session after 3 o'clock GMT +1 Central European Standard Time. Usually after 3 o'clock. Okay. Swissy, as I say, is excluded from news trading because it's pegged. There is fixed exchange rate. Not each news can be traded. Okay, I will use examples of tradable news and how it can be traded. I always give the advantage to Euro, Dollar, and GBP, and now especially GBP. Sometimes Japanese yen can be traded, and sometimes because for London traders it's too late to be awake to trade. Above mentioned news will have some impact on price action after it has been released, but not all are tradable. Distinguish tradable and high impact news. You want to focus on specific news. So distinguish high impact red news and tradable news. Pound is the most suitable for news trading, and if I trade it, I trade GBP dollar. It gives us a spike, usually the single direction, in contrary to Euro dollar. So after the news has been released, we see a spike. There isn't whipsaw price action as in Euro dollar. Usually the price goes in single direction, or it can move in a range, and then after the news it goes there or it goes there. So usually the spike is very singular. It goes in single direction. And due to that, it's much better to trade, so it's more tradable than other pairs. I don't trade GBP yen as its ADR differs and it's more unstable than GBP dollar. We want to see either a red or green number Forex Factory calendar. Okay. Also, we trade GBP and Euro on GBP and NFP news. Additionally, dollar yen can be traded on NFP. Always do demo first prior to going live. It differs a lot from classical trading as we trade spikes. There are two entries, proactive and reactive. Reactive setups enter 5 minutes after the first candle close in the news release direction. So if numbers are good, it will be marked green on Forex Factory calendar, and bad numbers are marked as red. Proactive enters immediately after the news at the break of prior candle, and GBP is traded on 5-minute charts. We will concentrate most on reactive setups, and we should enter 5 minutes after the first candle close. So we want to see green numbers or red numbers. So this was construction PMI on 10:30, and the actual numbers is very, very good, 62.6. You see it's marked in green. It's always marked in green or black or red. Green means good numbers, black is neutral, and red is bad numbers. Prior to news, open your M5 chart. This is M5 chart. Wait for the first 5-minute candle after the news. So this news came in, and this was the setup candle. This was the setup candle. Okay, this candle. If the news comes good for GBP, we want to trade the first breakout of that setup candle. Okay, the first breakout is tradable. Okay, because the numbers came good. If the numbers were bad, then we would trade to the short side. Chris came here with us, and he will join us after I finish with my presentation. Great, Chris. Welcome. So, we need to wait for the first 5-minute candle. After the candle closes, we mark the range. This is the top of the range. This is the lower part, the bottom of the range. Now, if the price goes to the downside and breaks this range, we won't trade it. We are interested in trading the long because the price came good. We can either place a trigger happy trade or wait for breakout pullback continuation. So trigger happy trade is enter the trade immediately 2 pips after the price breakout of that setup candle. After the price breakouts of the setup candle, 2 pips above, we enter a long trade, okay? And then you see the action. You can close it at after 10, 15, 20 pips, or you can trail a stop. It doesn't matter. What I do is I mark the next level. This was the next level, and I would usually wait the price to reach close to this level, and then I would close the trade. What can happen is that the price goes up, then pull back, and then continues. So you can trade the continuation of the price up to the next level. What I usually exploit, I enter immediately after the range is broken. I put the stop loss just below this level, and I wait for the next, for the very close of the next wick. I want to see price very close of the prior top, which is here. So if I entered there, I would have closed my trade probably around there. So the news is traded only 5 minutes after the actual release. Also, we can see another example, 10:30, all of numbers are perfect. We can see that basically this is setup candle. After the news has been released, there is setup candle. We mark the low, we mark the high, and we can see after the setup candle has been formed, what does it mean? You can also put a trade here because that was the top. You can enter after the close, or you can enter here. So anyway, you would be in a perfect profit, because it's not so hard to trade. You want to trade 10 to 20 pips after the news release. Proactive setup, we wait immediately after the news release and we go for breakout candle. I'm not so fond of proactive setups, because how we do it, we mark the range prior to news. This was the range prior to news, and just after the news release, we make basically a pending order there and pending order there, and then we wait for the first spike. But I don't do that. Personally, I'm not fond of that, because sometimes we can be mistaken. If one number is good and the other, let's say, is bad, the price can make some whipsaw. That is why I encourage you to trade reactive, okay? Mark the range of setup candle and trade it in the direction of the news numbers. So you are not interested whether general trend on cable is to the downside or to the upside. You want to trade this, the numbers, okay? And if the number is good, you want to enter long after the setup candle. Now, what about NFP? I will be fast with this and Chris will continue. It represents the total number of paid U.S. workers of any business, excluding the following employees: general government employees, private household employees, employees of non-profit organizations that provide assistance to individuals, and FAR employees. Advantage is it's very volatile. We can exploit fake outs, can be very profitable, and it may give us a prevailing trend for next couple of weeks. Disadvantages are it's very volatile. There are initial whipsaws, risks are very high, irrational movements, pairs to trade, euro-dollar, cable, and dollar-yen. So how we trade it? As you know, I have explained this a couple of times. You want to trade the first spike. If numbers are good for NFP, let's say NFP numbers are good, then we can make two types of orders. We can trade in the long or short direction. But that would be, again, proactive trading. We want to trade it reactively. So we are not interested, basically, we are not interested in numbers on NFP. We want to trade because this is 1 minute time frame. We want to see the first spike. If the first spike is to the upside, we wait approximately 5 to 8, 10 minutes after the first spike, and then there should be a retracement. We enter on 78.6 or on 88.6 fib retracement because we would place stop loss just below the last low, and that would give us a good risk to reward ratio. So we are not interested in numbers on NFP. We open 1 minute chart, we wait for the first spike. This was the first spike. Then we want to enter at 78.6 or 88.6. So this was 78.6, this is 88.6. In either way, we would be in profits. There is also that conservative entry that you can basically trade the break of the range of this first spike, but it doesn't give us very good risk to reward ratio. If you trade NFP, trade it this way. Try to demo trade it. Okay. So I think this was basically what I wanted to say. Just a bit of conclusion, then Chris can continue. Asian traders can trade Aussie same way as GBP. Japanese yen is prone to many manipulations by Bank of Japan lately. I don't trade CAD this way, but you can try to demo it because CAD news are somehow connected to oil prices and basically to USD CAD currency pair. So when CAD is moving, let's say just CAD currency is moving upside, dollar would go down, and it's vice versa for dollar strength. So generally I don't trade CAD this way. I have another way of trading CAD. I want to see extreme ranges to place either a short trade, long trade, usually counter trade, trend trades. GBP is the best one for news trading, and always demo the strategy first prior to going live. Okay guys, now Chris can continue. This is the way how I trade the news. Again, try to print this on your screen, capture this screen, and you can trade GBP effectively with this strategy, but you need to be prepared for, of course, demo trading first. Okay, Chris, now I will prompt you to a presenter so you can continue. Thank you very much, guys, and now Chris will continue.
Yes, indeed. Thank you so much. I was a bit late. I arrived at halfway, folks. That's why. A bit later than usual, but couldn't be any other way this time around. I'm going to talk a bit more about non-farm payroll because it is the biggest of the biggest events that one could do for Forex news trading. So Talat and I discussed it, and we said, okay, let me focus on NFP a bit more. So now, of course, and the non-farm payroll, it's a bit of a funny name if you think about it. I remember the first time I heard about it, I thought, why is this the most important figure? What does it have to do with farms? Way back. But it is very important. And the reason, I guess, why it's called non-farm is because the statistics exclude the farm employees and also some other groups, as you can see here. Basically, it measures how many people are really being added and to the business cycle or environment in the U.S., total number of paid U.S. workers. And that, of course, has a lot of information, and that's what we're going to talk about right now. Why is it important? Because it accounts for plus minus 80% of the workers who reduce the GDP of the U.S. So obviously, that figure, if it increases or decreases, has an impact on the future economic development of the U.S. And that's, of course, very important also for the entire world economy. So a major influence there. With this figure, government policymakers and economists determine the current state of economy, and by looking at trends, as we also do with, of course, charts, they try to make a predictive future approximation or estimation which way the economy in general is heading. Is it expanding? Is it decreasing? Is there some economic growth, or is there some contraction? So, of course, the Fed, they have a dual mandate. One is to keep inflation in check, but also to have a highest unemployment rate as possible. So these two things don't really match up. They're a bit kind of contrary to each other. The higher the inflation, the more unemployment, employment, but they don't want to have the inflation too high, so because then the pricing would spiral out of control. So there's that friction there a bit, and they want to maintain this dual mandate as good as they can. The thing with NFP, a fast NFP, basically means more people are employed, which means basically they'll be spending more, roughly speaking. So there'll also be eventually more money chasing the same goods, which means that products will increase in price, and that will lead to inflation. To temper inflation and to decrease the impact of inflation on the economy, the central governments or the central banks, usually choose inflation, for example, to increase inflation. That absorbs capital because there'll be less demand for capital, therefore chasing money, less money chases goods, as far as I've understood, and increase in interest rates should then dampen that inflation. So that's the reason. So how do you interpret that figure? That's the thinking behind it. Basically, you have an actual, as Talatala was explaining, and an estimate, and you have a previous number. And you're comparing these numbers with each other. So the actual NFP, you would compare it to the estimate, and if the actual is lower than the expected, then the NFP is adding less jobs than expected, which would be, in fact, not as good as for the economy. Or if the NFP is in fact higher than expected, then of course that would be potential inflation, which means potential interest rate increase, which actually means that there would be more demand for the dollar, roughly speaking. All right, so that's basically the idea. Here you can see nowadays we've had a bit of a mixture change in the dynamics influencing the currency price. We've had something called quantitative easing 1, 2, 3 introduced, and you can see here the red lines indicating when they've been introduced. This is the euro-dollar weekly chart, and you can see the impact QE1 and 2 had on the currency price of the euro-dollar. So when March 18, 2009 it went up, you see that was stimulated by the QE1. What that basically means is a non-traditional way, I would say, of basically accommodation, monetary expansion to ease and soften the blow of the financial crisis. What happened basically is that the inflation rates, the interest rates were already at historical lows, and they couldn't go lower. So what else to do if the interest rates are already at basically the lowest levels practically to get them at? And that's why these quantitative easing programs were set up. And of course, what they did was basically create more pools of dollars in a way, therefore making the current dollars less worth, the euro relative to the dollar more worthy, more value, therefore your dollar going up. When the QE1 stopped, you can see the price went down from 136 to 120, right? bounced up a bit, and then you see the third red line from the left, August 27, Fed Chairman Bernanke hints at quarter QE2, and then you see the continuation eventually when actually QE2 is introduced. Then the fifth line is when it ends, and you see the euro dollar actually fall from 145 all the way down to 120. And of course, recently we had what is not on this chart, it's QE3, and the continuation of the euro dollar actually to some degree to the upside from 120 to the recently 138 level. So that's just to give you an idea of a new dynamic. Of course, I'm sure you're aware of that. So the different approaches possible. Well, of course, the NFP is good for scalping on smaller time frames. Potentially, if you have a certain strategy, like the 1 minute strategy that you can use, as Talbot says, always demo test it first of all. That's one way of doing it, looking at the small time frames, of course. Oh, sorry. I hope you hear me. I hope you heard me. Maybe you didn't hear me that well. I'm so sorry. I realized that my mic is actually way up in the air, and I didn't have the Q&A in front of me. So, sorry about that. But I don't see any comments, so that's good. That's one way of tackling it, of course. It's also interesting for position traders and swing traders in a way. For example, if there's, of course, the NFP has a big, decisive impact on the direction, the potential direction where a currency could go. So with that said, obviously the NFP, if you're a big position trader and you're big in the sense that you use a big time frame and you're looking to catch a 1,000 pip move, then stop loss 50 pips less or lower is not going to really influence it. So you'll have that. That would be an important event for you to see if you want to maybe change that long-term position into the opposite direction, for example. For people who are maybe trading in between these time frames from the ultra small 1 minute to the ultra big 1 week, then I would say this type of trading day is not so good. Most of the people avoid it. If you're an intraday trader, it's difficult to trade. A swing trader as well, if you're more a smaller swing trader, they tend to avoid trading on NFP. So that all depends on your approach as well, of course. Basically, you can trade anything you want as long as you just practice and test it enough, of course. So as I said, NFP is important and a game changer often. And NFP could be the end or acceleration of trends or the start of new ones. For example, here is a slide where you see the euro-dollar daily chart, and you see which days the NFP had its impact. It's maybe a bit difficult for you to see, but we start on the very left example where we see, let me point to right there, the green dot. We see a bearish day on the NFP. That had some downside consequences, but only later did we really continue. Here was a bullish day that actually led to an upside. This was a bearish day, which actually saw a continuation of that. This was a big, actually stopping point, and we saw that correction. This was a continuation day of the downside, and this was a very bullish candle, and that really indicated the big turnaround here of the euro dollar for more upside. Continuation day, doji, stop, bearish continuation, a wick and reversal, bullish candle and reversal, a wick and reversal. So, of course, it's not as easy as it seems to interpret everything like this, but at the end of the day, basically the message, what I'm trying to say is that whatever happens within the day, within one trading day, all the ups and downs that NFP might have, and all the breakouts on the 1 minute chart, all the pullbacks on the 15, and all the continuations on the hourly, there could be a lot of volatility that day, but whatever happens, at the end of the day, you have a daily candle. And the daily candle is going to provide some information. Where's the high? Where's the low? Where's the open? Where's the close? Is there a big wick? Is there a strong close near the low or high? That sort of stuff will tell during NFP day. We'll have some good information. Just because it is NFP day, it is very important to see where the candle closes and what kind of balance of buyers and selling pressure there was within the day. So, waiting just for the day to end and making a judgment has an influence on that. Yes, definitely the balance of power within the day certainly will have its influence, of course, on the figure itself, from the figure itself. I'm sure that to a certain degree there is a balance as well, where maybe some certain levels here in the market or directional guidance have their influence. But obviously the figure is very important, and the expectations, etc., what we just discussed. Definitely. Here's a zoomed up version, by the way, of a certain part of that previous slide with the Euro-Dollar daily once again. And what I'm showing you on the left is a big wick, bullish day candles, and upside continuation. Second one is a close and reverse, bullish day candles, and upside continuation. And the last one, not too strong, but a bit of a wick at the top after a good run up. And it did eventually lead to the reversal, although the wick wasn't that substantial, still was half of the candle. Well, folks, my part was a bit smaller than Tarantulas. It was a bit later as well. Sorry about that sound. I didn't realize my mic was way in the air there. Do you have any questions, comments? Let us know. In the meantime, take a look at this screenshot with the spreads of Admiral Markets, something that you definitely will have interest in. We'll be back next week with our usual webinars, the Learning Labs and live webinars. Next week we'll have Scalping the Forex Market together here at the same time, same session, same day. So make sure to join then if you have time. And that rounds up our side of it. NFP is tomorrow indeed. Yes, correct. Happy you liked it, JS. That's great to hear that. It will be very interesting, of course, tomorrow's NFP and unemployment rate to see what we could expect. If how fast can this tapering that started last month continue? Will it continue? If so, when? How much? Speed? The FOMC seemed to have a very small effect yesterday, but maybe the NFP could have more guns. I would think so. But let's see.
Yeah, I would like to add, I also think that tomorrow will be a big volatility, especially if, let's say, if good numbers kick in for NFP, and probably there will be good numbers because ADP was good. I think that Euro can spike up a bit and then tank after the spike. So I'm not sure now, but let's see that tomorrow we could easily see 34.80 on good NFP numbers. But again, we do expect big volatility, and stay out of trade, or at least try to trade the first spike as we shown you. If you are not sure where the price will go and it can make whipsaws, then stay out of it. Me and Chris personally expect volatility tomorrow. Yeah. And also, there's a question how to find out when stress test is coming. Easily, open Forex Factory calendar, and then you will see probably a red flag just to the left side of that news release, and it will say stress test. So don't be afraid. Stress test, I don't think there is any stress test coming anytime soon, so don't worry about it, okay? Also, if you follow our blog, you will read about it. I will always state if there is stress test coming in, but I'm sure that it won't come anytime soon. Okay. When can I expect this webinar to be uploaded? This webinar should be uploaded tomorrow, or maybe if not tomorrow, then on Monday, but I think that it will be uploaded tomorrow. So, Chris, I think we can call it a day. We are very...
Sounds good.
Yeah, I think that we have explained those news trading things. So, thank you guys for attending. Good NFP to you. Great weekend. Many green pips. And cheers. Talk to you very, very soon.
Cheers, everyone. Have a great weekend, and good luck tomorrow if you're trading. Cheers.